gentlemen, good day and welcome to ABB India Limited's Q1 January to March quarter CY 2026 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded, and any unauthorized recording of this call is strictly prohibited. The recording will be made available on the company's and SEBI's website subsequently. I now hand the conference over to Mr. T.K. Sridhar, Chief Financial Officer of ABB India Limited. Thank you, and over to you, sir.
Thank you, Lucia, and good evening, ladies and gentlemen. Thank you for joining the Q1 2026 results. So on the call with me is Mr. Sanjeev Sharma, Country Managing Director for ABB India, Kiran Dutt and Ganesh Kutavade, who lead the business divisions and electrification. Sanjeev Arora is not able to join because he's traveling, but we have Balaji, who leads the process automation division. Right. So over to you, Sanjeev. I think we have the presentation up. The press release is in the process of getting uploaded. Right, so some technical glitch, not from our side, but from the other side of it. So I think we're trying to get it sorted out. So in the meantime, we will take the liberty of walking you through the presentation, which is definitely going to give some color about the press release also. Yeah, over to you, Sanjeev.
Thank you, Sridhar, and good evening to all of you. And thanks for showing interest and joining in on Friday evening this late. We will keep it sharp and brief for you. As for those of you who are joining it for the first time, and also those who would like to have a bit of a reminder, ABB in India at a glance is a company which is focused on electrification, motion, and automation solutions. And we have a very strong footprint for manufacturing in the country. And we represent all ABB Group business divisions in the country, which are highly localized and also are connected with the customers. And at the same time, we serve our customers from our 28 sales offices and increasing number of channel partners who take us to the deeper side of the market and also do value-added services closer to the customer. And from this country, we are exporting to about 30+ countries, which are increasing as we progress with our portfolio and footprint of the manufacturing in the country. Next slide. So those of you who have been following ABB on a constant basis, so last year we did see there was a bit of a market corrections, and then I think that were also reflected in our number. But for last quarter of last 2025 and the first quarter, we see demand has become resilient, and we are seeing quite a good uptick of it in our books. And this is across all our segments. As you know, we have 16 divisions, which are distinct business models, which are connected with 23 market segments. And we see all the market segments which progress to us, they are showing good resilience and good capex formation and also good ordering. So we had a 25% order growth, 6% revenue growth, and we continue to have a good cash position within the company, and also we have a good backlog which gives us the good revenue possibility. Sridhar will take you to the profit after tax numbers when we break down the financials later on. But some of the highlights that we announced about $75 million investments to expand manufacturing and R&D in the country. And we also dispatched first locally manufactured wind power converter from the Nelamangala facility, which is again one milestone, and also opens up another revenue and order stream for the future. And we also have our R2 formula, a next generation low voltage switchgear platform, which is used by our partners in the market to give a value added solution to power distribution industry. And on sustainability side, we have scope 1 and 2 greenhouse emissions down by 82%, and we have secured rank 3 in electrical and electronic sector and rank 9 across industries in BW Business World Most Sustainable Companies Award. Next, please. If you see the order momentum, it is coming across core and emerging sectors, namely in transport, building infrastructure, data center, food and beverage, process industries, and renewables, and which gives us good visibility going forward because the customer interest and the order pipeline formation is robust at the moment. And given our backlog, we see very good revenue execution going forward. Of course, we will see what impact the West Asia issues come in, but those will be temporary as we go forward. Please continue. So you can see that we have a portfolio wherein we are seen by our customers in the segments like data centers, renewables, industries, infrastructure, and transport as the best-in-class supplier of products and solutions. And we continue to gain and enjoy that confidence from our customers. And these are some of the examples that you can see. Next, please. So among the market segments wherein our 16 businesses are focused, which are the 23 market segments, you can see the emerging industries, which are growing quite strong, and infrastructure and transport, that is on a healthy scale, we have highlighted by colors, and core industries, which are modest, but they also form fairly large part of our portfolio. And we continue to see strength in some of these market segments, which are cyclic in nature. And that's exactly what is interesting about our portfolio, 16 business models operating on 23, and we continue to show resilient results over a period of time because there is a cyclicity among the market segments. So that's a good place to be, and that's what we have observed over a period of time. Let's continue. Just to give you an idea about what we do in the data centers, because that's a flavor of the day. So we have a lot of products and solutions, especially in the low voltage power distribution, which essentially powers up the computer racks in the data centers, and also the medium voltage and primary secondary distribution, which brings in the power into the data center, and the alternate power sources like generators, battery energy storage, that also become part of that solution. UPS is another power protection facility which goes from us, and then we have a number of drives and motors that go into the cooling system components, and number of installation products, and also automation solution for data centers, plus medium voltage substation. So this combination is enjoyed by customers, especially the hyperscalers. We have a good demand globally for these products. In fact, very strong demand globally as well as in India. And we are kind of serving our customers quite effectively, given our capacities available and our capabilities available locally to support not only in installing this solution, but also provide long-term service and support to the customer. Let's continue. Sustainability in practice, as I mentioned to you earlier, our GHG emissions are down by 82%. Water recyclability is up by 46%. And you can read our BRSR report, which we have released. And there again, we have highlighted in a much more details about what kind of focused effort our company does in this particular area. And we continue to get recognition for the work that is done by our teams across the country. Next, please. On the CSR part, we continue to stay focused on 3 areas: education and skilling, diversity and inclusion, communities and environment. And we have our track record for last 10 years that we spend 100% of our commitment. And we really measure not by spend, but by impact. And we also do audit for the impact of all the spend done in the areas we meant it to be done. And our board and the CSR committee always reviews it. And they have been quite satisfied in terms of the impact that we create with our CSR spending. Next, please. Now, factors that we are watching for 2026 are the economic power, then green energy and sustainability, urbanization and smart infrastructure, automation and AI, consumerism and lifestyle upgrades, and of course, coupled with the global uncertainty. This is a combination plate that we have. Quite frankly, we have seen many cycles in this country. We are manufacturing for the last 75 years. We have probably seen most of the events that we can record in the history. So our team and the businesses are pretty resilient in terms of not to over kind of blow the uncertainties, because every year there is something. Last year was tariff, this time is the West Asia, and a few years back it was COVID. We have all gone through those cycles, but the team really knows to keep focus on the customers, what the customer is demanding, and to keep fulfilling what customers' demands are. And I think that's a simple recipe for us to stay resilient. Next, please. On the financial highlights, now I hand it over to D.K. Sirdar, who will go on more granular on the results.
Thank you, Sanjeev. So just to give more insights about how did we perform in Q1. Orders were pretty strong. I think 25%, base orders 9, but large orders is something which we got, and it was from the data center space and the railway space, right? So not to mention what the order values, but these are the two market segments from which we got these large orders. But overall, I think we are in a very solid position in terms of order backlog. So 11,000 crores, I think is a good backlog which gives a nice visibility for the coming quarters. That's what we can go through. Revenue 3,184, slightly subdued, I would say. I think we were sort of well positioned to go to 3,300, 400 levels, but the last minute topics which we had to deal with on account of the West Asia crisis sort of stifled the offtake as well as the supplies, and that's something which we had to stay where we are at this point of time. So, and this naturally had an impact, cascading impact on the performance and the profitability level. But apart from that, we also had quite interesting development on the metal side of it, which is copper, silver, and aluminium. And apart from that, we had the currency, Indian rupee, depreciating pretty sharply against the European and the US dollar. So that's something which really led to a muted performance as far as profitability is concerned. I'm sure that this is not in line with the expectation of the market, but I think this is the best possible option with the revenue mix which we had and the crisis which we have to deal with at the last time. So this is something about what is the factors which led to a muted profit growth. So that's what it is. But the cash is definitely strong. So we have at this point of time 6,042 crores. But this is without the cash which we got from the sale of robotics. If I include that, it is roughly around about 7,600 crores. Right. So that's the overall strong cash position what we are in at this point of time. Okay, we go to the next slide. So to deal with what really impacted the profitability a bit more in a granular way, I think other income, of course, included the interest which we had been getting on the advances and the cash balance which we have. So that's been increasing. So from that, if you look at the material cost, stood same levels at 61.3 and 61.4 sequentially. But that compared to Q1 25, we are definitely up by 3.5 or 3% should be to be precise, right? So that's what it is. And now if you look at what it lead to the depot margin, I mean the higher material cost in 3.7%, I could say I would attribute basically three factors to that, which is one is definitely competition intensity and the commodity and the rupee depreciation part of it and the revenue mix of it. So the competition and the intensity probably a percentage commodity price increase and rupee depreciation almost 2%, and the revenue mix the balance 1%. So roughly, this is the cut between between what was the material cost in Q1 2025 versus Q1 26. That's the sort of the stuff. And personal expenses as a percentage, it remains the same, but higher in terms of value, more relating to people increase and the salary increase which happened, and a slight delta for the labor code impact on the revised salaries what we have. So that's how it is. But I think on the on the expenses part of it, so because we were well positioned to do a larger revenue, so we had revenue-linked expenses which is slightly higher. And if you look at it, as we mentioned, there is also a swing in the exchange commodity losses, so which is this time 27.5 crores impact on issues which are well known to us. So overall, I think this is a quarter where there has been a correction. There has been a bit of an unprecedented headwind, and due to which we could see profitability which is going down, and revenue slightly could have been a bit more higher compared to what we are doing at this point of time. So, but the good part and the more positive part of it, which we are all looking forward to, is the development in the orders, and which is going to give a good runway for revenues in the coming quarters. Next slide, a bit of an color on how did the business segments perform. So electrification, so 36% up, right? So I think on year-on-year, solid percentage is what we see, and that's more driven by the data centers and the building segment, number of orders what we are getting from this, and revenues also driven by backlogs, but could have been still more higher. That's what it that could be something which you would have wished for. And profitability 21.4 to 15.2. And last year we had a very big data center order which we got executed in Q1, which is not there in this particular. That's what we meant by revenue mix, and more importantly the cost impact on account of copper and silver price, which is being definitely to a high level in EL electrification segment, and to add to that was the rupee depreciation. So this is something which we saw, but I think we have a backlog of 200 crores, which is executed below the next 5 to 6 quarters. Motion is actually also grew by 22%. They are maintaining their quarter-on-quarter growth consistency in a band of plus 20%. Despite the competition intensity, what they see, and it is more driven by orders from the rail segment and also the renewables and private industries, which we have also been able to do for the drives part of it. So, and there's a slight decline in the exports, right? So, but I think it's more indicatable because of the crisis which we had to undergo in the last minute over here in the month of March. Revenues 1,200 crores and profitability at 12.8% is what we see. So I think that's a bit subdued, and also here the material cost was definitely higher, and that's also attributable to the same reasons as what we do. So overall, if you look at these factors, it has impacted the major product divisions of electrification and motion to quite an extent in this country. Yeah. Next, automation. Automation, while electrification and motion showed a robust growth in orders, automation, depending on which depends on more on private capex and the public expenditure, is more subdued on the order intake part of it. And but I think we have a good opportunity pipeline, but the decision-making speed is slightly slowed at this point of time as what we see for the human, as what we see. So I think a good opportunity pipeline, but slow decision-making is a characteristic of automation as what we see at this point of time. But we are confident that this will turn out to be potential orders in the quarters to come. Revenues, they are driven by weaker order backlogs, so the revenue pace is also slowing down. But the profitability is higher because of a good mix between service and project systems, and also some good profitability, profit margin realizations in the projects which are under execution and completion. So this is the overall view on business end. And order backlog 2,100 crores. I think we will have to ramp it up. So this is a bit of the model of business models, what we see by business areas. If you look at it, MO and Mill are now 81%. We don't have robotics at this point of time. Robotics used to be 5%, 4 to 5%. So but now without robotics, slightly changed, but not so. 19% to automation and 81% to MO and EL. In terms of offerings, projects at 8, service at 30, service at projects at 7, 81% for products and 12%. Yeah. By exports, I think it was 11 and 89, slightly higher because of the bit of more export orders which came in the more export revenues very quickly. Yeah. So that's it. So I think we could probably try to take some questions between now and 6:30, because this being a weekend, we don't want to extend beyond 6:30. And just in case if there could be some questions, take it out separately later for next week also.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants are also requested to please limit your questions to 2 per participant. The first question is from the line of Renu Pugalia from IIFL Capital. Please go ahead.
Yeah, hi. Good evening, team. My first question is on the private sector investment revival that you were expecting sometime around early this calendar year. So do you see, and as you have briefly highlighted, but do you see the customer sentiments getting materially impacted on decision making and closure beyond the process automation to even the core business segments? And also any likely budgetary impact on cash flows, can that derail or postpone the infra spend, which is in the moderate growth category that you have highlighted in terms of order flows? That's first question. And second would be on the recent CapEx that you have announced, how do we see the export portfolio ramping up and our exposures to data centers in terms of local product footprint expanding with the recent localization plans that you have announced on the new CapEx?
Okay. So Renu, I think the first question is around the markets. I think we have, and on the private capex, we have Kiran and Ganesh who could give an electrification view of how the private capex is happening, and we have Balaji. So for the motion piece of it, I think their commentary will also cover in a way directionally just because we don't have Sanjeev on the line. But I think we will try to answer that from this, right? On the capex part of it, which is the $75 million, what we said for, and not 75, that's for the total ABB, excluding the Hyderabad labs, is probably lesser. So I will give you a color at the end. So Kiran, if you would like to take the question, and then we pass it on to Ganesh.
Thank you, Renu, for the question. What we are looking at is quite a robust scenario in terms of investments into the.
Hello.
Does that answer your question, Renu?
I could not hear anything. I'm not sure if I was disconnected. I couldn't hear the management. Yeah.
Please stay connected while we check the connection for management. Ladies and gentlemen, thank you for patiently holding. We have management reconnected. Thank you, and over to you, sir.
Thanks. We lost a bit of an connection in between, technical glitch. Right, so but in our thoughts, we are now gathered together as to what we need to answer. Over to you, Kiran, back to you.
Thank you. Thank you. I think we were speaking about
CapEx.
Private CapEx, and then I was talking about data centers as well. I'm going to talk about hyperscale and co-location both getting into investments, and we are able to get some very good investments coming in at the same time, orders for us as well. I was also talking about railways and renewables. Rail, we are talking about both in terms of rolling stocks. At the same, we're also talking about the station development and innovation projects. Extremely good inflow of CapEx there. We are also looking at renewables. Specifically, I was talking about the BESS systems, which is extremely promising for us, and we are able to get great orders in the first quarter. The last point I wanted to make is on the building side, it's quite mixed scenario at this point of time. On the commercial side, are seeing a very good numbers, but at the same time, residential side, while the mid and the lower end is a bit of a challenge, but at the premium segments, we see a very good offer. So that's what from my end. Maybe Ganesh, if you can add your thoughts.
No, Kiran, you almost covered the segments which are looking promising. Like what you say, data center is very strong. Renewables is also coming up very strong, and it's reflecting in our order book also, and the opportunity pipeline which is getting shown. And there is a private investment which is coming in even the industry side. We have seen a couple of very strong inquiries which are in the pipeline. So we are very optimistic about the investment which is coming from the private side. Yeah.
Very good. Balaji, if you're there.
Yeah. From an automation side, firstly, I just want to qualify that there is a certain life cycle and of a project, especially in the early stages, and it follows a pattern, and typically automation comes towards the end of ordering. We see a strong pipeline. However, there are industries that are dependent upon petroleum products as their raw materials. There is a little bit of stress. We see that this could be a temporary one. Having said that, from both public sector and private sectors, the inquiry bank is quite strong, and those inquiries which is already issued, they are proceeding. Unfortunately, due to the nature of the stage, I'm not able to call out those specific segments, but there is a very strong pipeline and quite a strong movement towards closure of orders.
Sure. So can we conclude that basis, while you have seen execution headwinds because of the West Asia crisis, the ordering momentum or process has not seen any derailment or postponement from customers because of the ongoing inflationary trends or the West Asia crisis? Is that right, or there is some impact? That was my question.
You have looked at our order growth, right? So that it very clearly reflects the way we are in the position now. On electrification side, we are grown by that. So that shows the kind of robustness in terms of investment in India. And that's where we are also able to get a portion of that pie. And that's the reason why we are showing 30%.
Sorry to interrupt. May we request Ms. Renu to please rejoin the queue, ma'am?
So I think there was one question which Renu had raised about the investments, how much it is going to help us. I think, as you have already said in the past, ABB sees that there is definitely a market which is developing for the products and services what we are manufacturing. So they read the future market opportunities to serve the future market opportunities. So it is basically coming from drive products expansion. We have then the service expansion for motion, and also more in the service. We will have the EL, the smart products manufacturing also increasing quite extensively going forward, right? So that's the plan what we have, and I think we will hear more as we go into the few quarters as these projects are getting commissioned.
Thank you. The next question is from the line of Amit Mahawar from UBS. Please go ahead.
Yeah, hi, Sridhar. I just have two questions. First is, do you think this is going to be a year where, we will have a lot of lumpy orders, which is basically going to be part of the intake? And more importantly, and you can specify if this is going to be a strong, high double-digit growth year for orders. And second is on profitability. If I look at the parent commentary, obviously EL was a very, very strong indicator, and we also saw that in some bit in our results in terms of top line growth. Do you think the profitability, this year can be significantly better than last year? And I understand the short cycle weakness is still, holding up. So any color on the profitability? I know we don't give guidance, but, and we have variations in this quarter, but for the balance of the year, any color on profitability? Because I can see a lot of initiatives by the parent. So I just want to understand how is India positioned. Thank you.
Okay, with the limited knowledge of how the parents are profitable, if you understand, they have the balancing power of forex gain in countries which are exporting, right, to economies which have a weaker depreciation currency, and that's a compensating upside, right? So whereas we don't have that. So that's an intrinsic advantage what they have. And also their growth, if you look at it in the which are highly profitable, and is of course also in the supply, and so the ability to get a premium is far higher, right? So therefore, what I mean to say is the yardstick of the global performance to compare the India performance is something I think we cannot walk it through, right? So that's this thing. So now coming to India performance as such, going. We have in backlog of 11,000 crores. I think we'll have to execute. So what is probably which we will have the lever is around the absorption capacity absorptions, which will really help us going forward. That means the velocity of revenue conversion has to increase depending upon what the customer offtake is, right? So, but whereas if you look at the pricing, the support to get more profitability is something which is now saturated compared to the period, right? So now you have a lever of volume which could pull up the margins, but you have the other impacts of the forex and the commodity, which is not in our control, which is basically more than offsetting what you can also do and a volume basis. So I think what we expect is that I think we should be able to mitigate this risk of forex and material volatility at this point of time with an volume which we see. Right? But I think we need to work more on how the market develops in terms of accepting more price increases to the market. So that which is more a color which I could give at this point of time on it.
Can I sneak in one small one?
Yes, please.
Yeah, sure. Yeah, sure. So, when we talk to channel partners across you and your peers, there is a very clear short cycle weakness as we speak for different reasons. It's been there for 2 years. Do you think this is a year where your base business can grow in top line by 15% and large order? I can already see last 2 quarters are very, very strong and we have a good pipeline. So collectively, the intake, for it to move towards a different run rate, do you think this is too early for us to comment, or in next 2-3 quarters we can see base orders, shifting because there is a restocking cycle for last 2 years? So any comment on base business, Sridhar? That will be helpful. Thank you.
So I think, Amit, base business we do only at 9%, is not the 15% of what we see, right? So that means we definitely see the channel partners. I don't know with whom you've spoken. I think what we see is that there is an market velocity which is there. It's not that market is bad, but I think it's more about the timing of it, right? So it could be a bit of an, as you rightly said, a choppy bit of situation. But the good part is that there are opportunities, and we are confident these opportunities will convert into orders for ABB.
Thank you, and good luck, Sridhar.
Thank you.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. So my first question is, what kind of inflationary pricing actions we have taken across businesses to mitigate the impact of inflation? So you can quantify the price hikes you have taken to mitigate this across businesses.
Inflation, okay. Inflation, commodity inflation, okay. So we are a product business, product organization. That's what it is. If you look at it, we have more than 70% of our business is products. Always, even though we call it a short cycle, it will have some lag. So therefore, we always have a two lag to impact the price. So that's something which we as a business take a strategic decision to revise the prices. So to add more color to it, I think I could invite Kiran to give a bit of a more insight on this as to how do we manage these price increases.
Absolutely. At the end of the day, any price increase what we have done is to go for a price increase. We've already gone for 2 price increases. Market is public anyway, and that's the way. And as Sridhar said, there is a lag between the prices which are impacting, the costs which are impacting, and the price increase in the market. And that's what we need to manage, and that's what we have done. We've already implemented 2 price increases now.
Can you quantify it, sir? How much would be the percentage increase?
So that's something which is very, very sensitive for us to divulge. I don't think it's an apt answer which we could give, please.
Okay. So the second question is on data centers, sir. So on data centers now, we are maybe going from 2 gigawatt to maybe 10 gigawatt in 4 to 5 years. And there would be a significant ramp up from the hyperscaler side. So I think initially in your commentary, you did mention about 4-5 product lines there. So just wanted to understand how is our TAM increasing as hyperscalers gain market share in this entire capex? And also if you can help us understand what are you doing on the substation side of it?
Substation side. Ganesh? Ganesh,
Yeah, sure.
If you...
See, as you are very rightly said, quite a lot investment which is happening on the data center, not only in the hyperscale, but even the colos and the edge data center. And our portfolio is very well positioned in fact, across the electrification as well as all other products to really take on into this particular job. And we are also actually matching the capacities as per the requirement, because many of these hyperscalers has already signed rate contracts with us. and we are very well positioned to capture this particular market. In fact, we are building up the capacity to meet their demand.
On substation side, what are we exactly going to do? And also the opportunity in terms of TAM, what is like our per megawatt opportunity, addressable opportunity now with this ramp up?
Would you like to say something on the data center?
On the substation side.
On the data center, what is total content and why? What is the substation? Of course, is not the total content of ABB on data center. I know.
Per megawatt. Per megawatt, if the capex is 80-90 crores or 50 to 100 crores, what will be our per megawatt opportunity there? And on substation side, what are we exactly going to do?
So as we have discussed in past and also in a slide today, that we have different opportunities in the data center, which is a direct opportunity wherein customer buys the power supply, bringing a medium voltage input to the where they want to set up the data center. So that medium voltage kind of switch gear and the associated equipment, that's where our scope is. And after that, it gets stepped down and goes into voltage distribution to the power rack, rather the computer racks. That's the another scope, and then backed up by the UPS, and also in the utilities and ancillaries, we have drives and motors going. So that's the typical scope we have in India as well as globally. Yes, we do know what is the factored scope per megawatt, but this is something which don't publicly talk about. But yes, it's a substantial scope, especially when you have the larger gigawatt opportunities. I think the size is a very large opportunities that we see. So far we have executed some contracts with the hyperscalers. I think the speed at which they are executing it, and also at the quality they are executing it, the demand of our products is preferred in the marketplace, and that's what we are enjoying at this point of time in India as well as outside India. So I'm sorry, I'm not able to give you a factor, but we do know the factor. Yeah.
What's the percentage of order book, current order book in data center? Let's see that data, if you can share. What is the total order book? What is the percentage of data center order?
Data center orders would be roughly about 12 to 13%.
Okay. Sure, sir. Thank you.
Thank you.
Yeah, it's not a fixed percentage. It does vary in a band based on when the order gets booked and what the size of the orders and the book. So it can vary between 12 to 16% as well. Okay. Yeah, please continue.
Thank you. The next question is from the line of Atul Tiwari from JP Morgan. Please go ahead.
Yes, sir. Thanks a lot. Sir, in the month of April and May, have you noticed any incremental weakness over the month of March for your short cycle orders because of the customer sentiment around war and fuel prices, etc.?
So that we do 90% of our business is in India, and 10% is exports. Quite frankly, last year there was a weakness in the market for different reasons. But those two or three quarters we saw it. But starting last quarter of last year and what we are experiencing, we're really experiencing robust demand at the moment. So quite frankly, it is not adding to our concern directly what's happening in the West Asia at the moment. If there is a lag effect that comes up in the months and the quarters later on, of course, we will share with you, but right.
Okay, sir. Good to know. And so my last question is on price hikes that you mentioned. So when you are taking these price hikes, are those hikes acceptable to customer? And despite the price hikes, are you able to kind of broadly maintain your market share for the respective products?
So we have had quite a good experience, during COVID period, wherein a lot of supply chain disruptions came and we had to pass on some cost to the market, and which we did. And now one phenomena we have understood and clients have understood pre-COVID and post-COVID is that post-COVID the customers have become more kind of recipe. They're more kind of aligned with the thought process that when the market disturbances take place, they have to participate in the market with the suppliers to get the high quality products. So one is that the demand for the high quality products like we is quite high and the customers appreciate it. But whenever there is a inflationary issue or where the displacement of the supply chain takes place, whenever we go with the better price in the marketplace, I think customer responds positively. So that's where our team is quite sensitive to it. Not that we have to pass on everything. We also optimize with the productivity in-house. And then whatever we cannot hold on, our customers are able to participate on that. And the increases that we carry it out is basically calibrated around that. Yeah.
Okay, sir. Good to know. Thank you.
Thank you. The next question, ladies and gentlemen, before we take the next question, we request every participant to please limit your question to one per participant. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, good evening and thanks for the opportunity. My first question is, do you have escalation clauses in long cycle orders like Metro Rail, which you signed in this quarter?
Escalation for the
Escalation, commodities, high commodity inflation. If it happens, are there escalation clauses which protect us?
Yeah, Mohit, I think it's a very good question. Thanks for that. Okay. So I think there are escalation clauses, there are price variation clauses in all contracts which we do on a long-term basis. But we should understand these price escalation clauses may also come with a ceiling, right? After which it is there. So it's basically about risk mitigation and how fast we execute this particular contracts. But to answer to your question, yes, we do have price escalation clauses in our contracts.
Even when you sign with the private parties, right? Is that right?
Yes.
If I can ask you one more question, are you seeing the conversation happening for large data centers of 100, 200 megawatt size? Or do you think it's too early and you expect it to materialize as we enter F20, F27 and F28? Or F20, F29?
Best person to give a color to it is Ganesh Patawade.
What the question? Can you please repeat?
The question is, are you seeing the conversation happening for very, very large data centers of 100, 200 megawatt quantum? Or do you think it's too early and those conversations will start in maybe CY27 and CY28?
No, it has already been started because whatever hyperscalers have placed order on us in the previous years, those executions are ongoing. And even whatever contracts now which we are signing or discussing, there is already delivery schedules which has been given for the 26, 27 and even up to 28. So conversation is already going on. So I don't see any delay into that.
For the very large data
centers. Sorry to interrupt. May we request Mr. Kumar to please rejoin the queue? Thank you. Ladies and gentlemen, we would request you to please limit your question to one per participant. The next question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much, sir. In the beginning of the conversation, you talked about 1% impact from competition intensity. Can you give some more color on what are you seeing in the market and in what segments?
So we have 16 distinct businesses, and if you pick up each and every business, they have a very different profile of competitors. So if I collage it for the whole company, it becomes a very large kind of a country. So I would say, yes, you're right. There is a competition intensity as the size of the market grows. You have participation coming from Japanese, you have participation coming from Koreans, some Chinese. So you naturally have not non-traditional players which they're increasing the marketplace. So it's not the majority of our market segments. It's on the certain market segments wherein it is more prevalent. Increasing on the competition side.
That's helpful. And if you can just give some more color on how should one think about the $75 million capex in terms of phasing and when do you expect it to capitalize?
It is about expanding our capacities, both in the development as well as, certain businesses which we had, they were small, but now they have grown to a size that they require larger places to produce more. And also we have introduced some new product pipelines which are localized, and they also have not only mandate for India, but they also have mandate for exports. So those are the places in these expansionary investments are being carried out for us. And this is a continuous process, and we will see that in future there's always a run rate for it. Yeah.
Understood. That's all from my side. Thank you so much.
Thank you.
Thank you. Participants are requested to only use handsets while asking a question. The next question is from the line of Sameer Thakur from Ambit Capital. Please go ahead.
Hi, thanks. Can you give us the breakup of volume and price within the groups? Is that possible? Volume and price. Thanks.
Mix volume and price.
I didn't.
Volume and price mix of what?
The growth. I mean, if you sales growth, within that, how much is the volume and price?
Sorry to interrupt you, Mr. Thakur. Sir, can you please check your handset mode? We are unable to hear you clearly, sir. We have lost the line for the participant. We'll move to the next question, which is from the line of Rahul Gizare from Macquarie Capital. Please go ahead.
Yeah, hi. Good evening. So we have seen a sharp decline in margin, over the last 2 years, and we understand this is a combination of QCO, forex, and now the Gulf War being the latest variable. Now, based on your assessment and on the back of the price hike that you have taken, when do you think we can see ABB going back to 18-19%? Or if that is a two-step process, when do we see the company moving back to 16-17% margin?
Okay, so I think, Rahul, I think we need to deal with the problems one at a time, right? So, but unfortunately, the problems keep coming. It doesn't seem to be ending. But having said that, I think there are continuous efforts to mitigate this particular risk in the market. So the combination of both volume and pricing, and also the inflation being able to take the inflation of commodities and liquidity. It's a very bit of an I would say not a simple game and work to do, right? So I think all efforts are on. We also aspire to be in the so-called once we had reached 15%, and we said that we will be there. 12 is what we ended up last year. So that is actually a good the range to be in, as what we see with the current challenges, what is ongoing in the market.
Mr. Rahul, is your question answered?
Yeah, but do you see? Yeah, thanks. So do you see this entire year will be subdued in terms of profitability based on the backlog that you'll have and the limited price hike that you have been able to take?
So normally we don't give any guidance about what could be the future, right?
No, I'm not looking at guidance. This is your cost, and you have taken X price. So price hike. So have you been able to take price hike higher than the cost? That's the only thing I'm looking at.
But we're a short cycled order. The price hike which you take today is not valid next quarter because the commodity and the forex is faster than the price hikes what we have.
Okay, so regular price hike is the answer. Okay.
Because I think there is always a lag between what the inflation in the market is behaving on the input cost vis-a-vis the price which you could take. We are taking into account the competition intensity, and the market dynamics.
Sure. Thank you very much.
Thank you.
Thank you. The next question is from the line of